Hi everyone, it's Christine Kopr with Sotheby's Realty in Vancouver, BC, and today I am with Jacqueline Zerbe from Total Mortgage in North Vancouver, and we're talking about the jumbo and pretty much expected 50 basis point drop to the Bank of Canada rate today. So Jackie, take it away.
Thanks again for having me, Christine. Great news. As we were all expecting, the Bank of Canada to decrease their overnight lending rate from 4.25% down to 3.75%. That 0.5% decrease amounts to about $30 less per $100,000 that you borrow in your mortgage payment. So that's great news. Their overnight lending rate is now 3.75%. That equates to a drop in prime to 5.95%, down from 6.45%. Anybody with a variable rate mortgage or with a line of credit right now is singing hallelujah because we've been waiting for these drops. It was widely expected that it was going to drop by a half a point. And there's some talk that at the last Bank of Canada announcement in December, there might be another half a point rate drop. So we shall see. Nobody has a crystal ball, but things are trending in the right direction, which everybody's happy about. Now, what's interesting is that there are some predictions from the major banks. So I'll just run through those. Again, nobody holds a crystal ball, but there's a lot of chatter in the market. So for example, RBC, National Bank, and Desjardins are forecasting another 1.75% drop in prime by the end of 2025. So if you have a
Wow.
mortgage coming up for renewal in the next year, year and a half, this is what you should be interested in watching. That would put prime at 4.2%. Now remember, you're not paying prime on your variable rate mortgage. You're paying prime less a discount. Right now, we're seeing prime discounts between maybe prime minus 0.8 or prime minus 1, depending on if you're conventional or insured. So if you have a prime rate sitting at 4.2, that could potentially put your interest rate around 3.2 or 3.4 in a year or so. So this is very exciting news because everybody's been holding their breath for the last couple of years, wondering when is prime going to decrease? When is it going to decrease to become substantial enough for us to consider going the variable rate route again? Now, not all banks are quite as aggressive. CIBC predicts that prime will settle at 4.7. So they're a little bit more conservative, as you can see. TD and BMO are predicting that prime will settle at 4.95 by the end of next year. So you can see there's quite a range in predictions from those banks. So right now we're super excited with today's low rate announcement, but we're still kind of cautiously optimistic to see what's going to happen in the coming months.
Awesome. Like to summarize, it sounds like some of the banks are predicting further interest rate decreases. And while that's music to the ears of all mortgage holders or anyone thinking about getting into the market, it is also a sign that the economy is weakening, right? So the bank usually only decreases interest rates when it needs to stimulate the economy or has fears that perhaps inflation is falling too fast or too low, because while they don't want to have high inflation, they also don't want to have very low economic activity, which could be the signs of a recession or one that we're kind of partially potentially in already, because recessions can lead to job loss, which would then be a lot harder to deal with if there's no other job to go and get after you lose your job, right? So the little bit of like possibilities of fear in the market from that perspective in terms of consumer confidence. But for everybody else in terms of the housing market, and if you have a mortgage or you have a renewal coming up, this is all music to our ears. So let's just recap. You said, was it $30 for every quarter point decrease or for this?
$15
Sorry,
for every quarter point decrease for every $100,000 that you
100,000.
borrow. So because there was a 0.5% cut today, that's going to equate to $30 for every $100,000 that you borrow, roughly. So super
Okay.
exciting news. Everybody's breathing a sigh of relief for sure. Now, we're specifically talking about the prime interest rate and how that affects variable rate mortgages and lines of
Right.
credit. And there's going to be a lot of chatter about predictions about what's going to happen over the coming year. That does not equate to the same decreases in fixed rate mortgages. Those are funded off the bond market. The bond market has already priced in these decreases we're going to see with prime coming down further and further. So anybody that's sitting on the sidelines waiting for those fixed rates to be 2.5%, 3%, you shouldn't be waiting. Those price drops have already happened. We're for sure going to see a little decrease in fixed rates, but it's not going to be to the same 2% drop extent because we've been seeing those rates steadily decreasing over the last year. And yes, we might see a little bit more over the coming months, but don't hold your breath. Don't wait on the sidelines. Now is a good time to be entering the market or moving up the property ladder. As always, reach out to your professional realtor or your professional mortgage broker, and we can help you along the way.
You had commented that people were expecting, hoping that fixed rates go back to that like 2% range. And that is just so unrealistic. Like, I think it's a really important thing to remember that fixed rates in the 2% range were only a COVID phenomenon. Like, leading up to COVID, it's around the 3.5, 3.8 mark were totally normal, and that is a more average like interest rate. Please don't hold your breath for 2% rates. It could come maybe, but it means that we're in signs of trouble. The stock market is a predictor. The bond market controls your fixed rate mortgages, and the Bank of Canada controls your variable rate mortgages. So if anyone has a variable rate mortgage with a fluctuating payment, your payments will be going down. Otherwise, for the ones that payment stays the same, but just the ratio of principal to interest, that's going to change. So you'll have more mortgage pay down versus paying of interest on your loan. So really great points, Jackie. And so as a final reminder, though, connect with your mortgage broker, right? Especially this is not just for people who are thinking about getting in the market. And if you are thinking about getting in the market, this really could stimulate the activity. We are starting to see a little bit more activity recently, particularly in October. But if you're somebody with a mortgage and a renewal is coming, or maybe you've even just renewed recently, it is worth getting in touch with a mortgage broker right now because there might be this opportunity to even refinance, even if you just got into a mortgage recently with these decreases and things happening in the market and also the penalty gap. So that's just a quick shout out for anyone that's sitting out there with a renewal, because you do want to be in touch with a mortgage broker to find out what your options are. And if you're about to get in the market, reach out again and get an updated rate hold or figure out what your new budget is, because today's announcement has a significant impact from a variable rate perspective. So with that, we will meet again and talk about some of the other awesome rule changes that have come from the federal government, and we'll go from there. So thanks so much for your time, Jackie.
Thanks for having me. Always a pleasure.
All right, everyone, have a great day, and always reach out to us with any questions that you have. We look forward to hearing them. Take care.